Today, the stock market gapped down and continued lower to very critical support levels. Will the stock market break down and continue to trend lower? First up, let's take a look at the SP500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today SPY was down 0.71% and we did gap down below that support at 407 and we did test critical support at 404, and so far that support level is holding up. Now, if you look at the price action, we went all the way from critical resistance at 417 all the way down to critical support at 404. So this is going to remain the trading range until we get a breakout. You can see we went all the way from the top of the Bollinger Band all the way down to the bottom of the Bollinger Band. So volatility is starting to expand, and that is very good for trading as long as you have great risk management. These are going to be great trading environments for you traders out there, but you need to have a plan and you need to be disciplined. And right now, as far as I'm concerned, the market is very simple to trade. You just need to watch these critical ranges. So for that reason, I am not bearish on SPY at critical support. We need to see price action breaking through it. You cannot assume this support level is going to fail. You need the confirmation of that price action breaking down below SPY 404. If we break down below 404, we are very likely coming all the way down here to the 200 daily moving average to close this gap at 396. It is that simple. If SPY starts breaking below 404, we are going to maintain a downtrend that is going to take us down to that gap fill, and it's likely going to happen very quickly because, as I always say, bears take the elevator down. Now, on the other hand, if we start bouncing off of SPY 404, you need to stay bullish because we also have gaps to fill to the upside right around 408 and way up here at 415 and even as high as 421. If you make the mistake of assuming the market is going to break down and you do not wait for price action to confirm it, and you start shorting right here at this critical support and we start to get a very impulsive bounce, you are going to have a very difficult time in this market. Now, keep in mind, there are smaller time frames and things going on in those charts that we're not going to get into today, and I do that a lot on the Stocks Channel Discord, giving you those intraday updates to allow you to trade during the day. But bigger picture, daily chart, this is going to be your critical range. So do not rule out the possibility if we do bounce, we can still put in lower highs and then come down and break that support at a later date, and that would be completely normal and expected price action. However, that bounce off of support into resistance means you should not be shorting until we get to resistance. So if you find yourself currently shorting down here near support, you are taking on a lot of unnecessary risk. It's the same exact thing I said when we were up here at critical resistance, and I told you there was no reason to be bullish until we saw price action break that critical resistance. And if you were bullish at resistance and you ignored what I said, then you are having a very miserable time on the way down. This is very simple rules to follow, and the price action does all of the talking. We have no care in the world as unbiased price action traders whether the stock market goes higher or lower from here, because we have a plan that is prepared for either scenario. Once you realize that whether the market is going higher or lower, you are still making money as an unbiased trader, you are really going to start appreciating how easy it is to trade following price action. It's simply built around risk management and putting the odds in your favor and making sure your winners are bigger than your losses. And the number one way to do that is allowing the price action to tell you which trade you should be placing and not allowing a bias to tell you which direction. As soon as you start having a bias, you're going to notice it because you're going to start losing a lot of trades. And if you start losing trade after trade, it is likely because you are not listening to what the chart is telling you. On the NASDAQ 100 triple Qs, we were down 0.35% today, and as you can tell on the triple Qs, we are relatively a lot stronger than the S&P 500 because we are not yet sitting at critical support. We did break down below the 20 daily moving average, but the critical support is all the way down here right around 311 to 312. So it is possible big tech can continue to go a little bit lower, but in the scenario where this is bullish, we are likely going to hold above 315 and then start marching higher towards that double bottom price target at 327. So if you want to stay bullish in the triple Qs, you need to manage your risk right here at 315. And then if we bounce from there, we are still going to have resistance right around 321 to 322. We're getting a lot more bearish if we come back down to the support zone and break through it. And we do have that gap to fill at 308. Now keep in mind, if we come all the way down to this gap fill, that is critical support. And that is also our rising support trend line. So it is possible we could go all the way down to that, still put in a higher low, and then go bounce up towards 327 at a later date. So do not rule out any possibilities, and that's why we let the price action do all the talking. Just manage your risk around what the price is doing at these critical levels. This is a very clear rejection from 322, but we don't have the lower low breakdown yet, so this is not bearish in the larger swings. Intraday, there's a lot going on, and again, we are not going to go through that each and every day. It would take way too much time, and that's what we're already doing in the Stocks Channel Discord. Jumping over to the Dow Jones, we were down 0.83% today, and the Dow Jones is very close to closing that gap at 329, but we now have another gap to fill up here right around 334. As you can tell, there is gaps all over these charts, and there is no way you are going to be able to tell which gaps are going to fill first other than following the current trend. Right now in the Dow Jones, we had that higher high breakout above 340, and now we have the lower low breakdown below 333. So this is exactly what you're going to see when volatility is expanding from the top of the Bollinger Band all the way down to below the outside the lower Bollinger Band. Again, this is an overextended condition, so don't be surprised if we bounce to fill the gap at 334 before we go fill the gap at 329. Manage your risk in the Dow Jones down here around the rising 200 daily moving average at 327, and if we break below that, we have that gap to fill at 322. On the Russell 2000 IWM ETF, we were down 1.12% today, and again, we gapped down, so we left another gap that needs to be filled above 172, and we're sitting right on top of critical support at 170. Remember, if I zoom out, this is a giant head and shoulders breakdown. If we start closing below 170, that easily takes us down to 164 and possibly even lower. This is a giant bearish pattern with no confirmation until we start closing below 170. So be patient and wait for that confirmation. If we start to bounce from here, you're looking for the gap fills at 172, resistance at 176, and the gap fill at 181. On the ARKK ETF, we were up 2.82% today, bouncing off of that support zone just below 35. But we are still looking for lower prices to fill the gap below 32 while we are trading below 37. If we can break above 37 and get back over the critical resistance at 40.5, it is then and only then that we're going to get bullish on this ETF. On the VIX, we were up 9.55% today, and the VIX is trying to break out above 20, so we are starting to see more volatility that could tell us we're heading back into a bear market. Again, we don't need to make any predictions because the price action will do all the talking. And if we get another confirmation of the VIX above 20 and lose critical support in SPY, we are instantly risk off and a lot more bearish on this market. It's that simple, so do not overcomplicate it. On Bitcoin, we're currently down about 0.8%, and Bitcoin is still getting rejected around that resistance at 29,500, and there's still the possibility we're putting lower highs before the next lower lows. So if we break down below that support at 27,000, we're looking for high volume selling to much lower prices. And a price target on that is going to be right around 25,000. We're only getting bullish if we can break out to a higher high above 29,500. On Google stock, we were down 0.68% today, closing below the 20 daily moving average yet again, but still sitting above this critical support zone between 100 up to about 104. This is going to be a $4 buy zone, and we cannot get bearish until Google breaks down outside of it, and then we'll likely come back down to the support trend line right around 95 to 96. We're instantly getting more bullish if we can break the high at 108, and then we'll likely hit that price target at 110, and we could likely go even higher than that. On Amazon stock, we were up 0.34% today, closing right on top of this resistance zone at 104 and still getting rejected below our old support trend line that is now resistance. To get bullish in Amazon, we simply need to break back over the 200 daily moving average, and then we could start marching higher towards that next target at 115. However, we're instantly bearish if we start closing below 102 because we're likely coming back down towards 94 and then 90. On Microsoft stock, we were up 0.33% today, and Microsoft is really just building out a bull flag above all of the moving averages and getting very close to that price target at 310. Again, once we fill that gap and hit that target, I think we are due for a cool down in Microsoft that could take us back down to the breakout between 290 and 293. So even though we are in the bull trend, you need to be very cautious when we're this elevated and this close to the price target. On Nvidia stock, we were down 0.86% today, finding support at the rising 20 daily moving average, but we're still needing to be cautious while we're trading below 280. This looks like it could have been a false breakout move to the upside, and this is exactly what Amazon stock did before it started falling as well. If we break down below the 20 daily moving average at 272, we could come back down to the bottom of the range at 262, and if we break out below 262, we're looking for high volume selling down to 242. We're only getting bullish if we could break above 280, and we still have the valid upside target at 298 if we get that bull breakout. On Tesla stock, we were up 0.37% today, and Tesla is still holding this support at 160, but we're right up against resistance right around 167. So the winner of this is going to be whoever can break this range first. The bears need to break below 160 and the bulls need to break above 167. If we break down below 160, we are looking for this to be a lower high before we go down and fill that gap at 146. And if we break out above 167, we're getting more bullish for the gap fill just above 177. So wait for the range breakout and then trade the breakout and manage your risk right there at the support or resistance level. On Apple stock, we were down 0.99% today, and Apple closed right on top of our support trend line at 165, and we are still in the bull trend, and Apple is reporting earnings after the bell. Now keep in mind, Apple has gaps to fill at 167 and 171, and there's a very good chance those gaps to the upside are going to fill before we go any lower because we're still in a bull trend. If we don't fill those gaps, then we're likely going to break down through this support at 165 to 163 and then come down here and fill the gap at 158. So manage your risk right here between the support zone of 163 and 165. And as long as we're above that support, we are looking for the gap fills above. On the financial sector, we were down 1.28%. And today we're seeing financials are just getting way too oversold. And we do have gaps to fill to the upside. And we are filling a lot of the gaps to the downside. Don't be surprised if the financials start to bounce very soon. On the industrials, we were down 1.09% today, still breaking down from that lower high rejection, and we look like we are going to build out a consolidation flag as long as we're trading below 100. On the healthcare sector, we were down 0.79% today, and we came back down to the rising 50 EMA and found support, and we do have gaps to fill to the upside. This is starting to look like a bull flag in the healthcare sector, and a breakout from here could take us up to 140. On the energy sector, we were down 1.11% today, breaking down below that support and continuing outside the lower Bollinger Band, so we are going to be looking for a dead cat bounce in the very near future. A dead cat bounce would likely take us back up towards this resistance at 80.5, and we do have a gap to fill up here just above 83. So jumping back over to the S&P 500, as I continue to warn you, never get bearish at critical support. You need price action to prove we are breaking down, which means we need to see price trading below critical support before we get bearish. Remember, we got risk off at critical resistance, and I told you don't be bullish at resistance, and it's the same message now for the bears. You do not want to be bearish at support, wait for it to break down, and then it should become resistance on our way to lower prices. That simple rule of waiting for confirmation is going to save you a lot of headache, and it's going to save you a lot of losses by just assuming something is going to happen. Remember, if you're making any assumptions on where we're going from here, you automatically have a bias, and while your bias may be correct, more often than not, having a bias is going to hurt you in the long run. Let the price action do all of the talking and look at the chart with absolutely no bias and make sure your trade plan knows both scenarios and it's only price action guiding you on which one you're going to trade. If you want to come trade with other price action traders and get access to all of my intraday updates and analysis, come join us over at the Stocks Channel Trading Discord community. I also have my own trade alert service called Bank Trade Alerts that will send you all of your buy and sell alerts directly via email and text message, and only trades the ETS TQQQ and SQQQ. You can find out how to join the Stocks Channel Discord or Bank Trade Alerts by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.